The funny thing about crypto is it's one of the only markets where people are still primarily focused on single exposures. If you look at the equity market or you look at the bond market, no one's buying one stock. They're buying a basket of stocks. No one's buying one bond. They're buying an ETF of bonds. Our view is that the same is going to be true in the crypto market. As you move from primarily retail to primary institutional capital, they're going to want diversified exposure. That's the way institutions invest. That's what they're taught in school. That's what they're taught in their careers. And that's a dominant paradigm. So I think you're going to see more of these diversified exposures, more of people wanting to make a bet on crypto and not make a bet on, Bitcoin individually or Ethereum individually. Let's just make a bet that crypto and public blockchains are going to be more important in 10 years than they are today.
Matt Hougan begins by highlighting the Bitcoin ETF's explosive potential and pointing out that we may be just in the early stages of a significant change in the financial environment. He focuses on the notable advancements and notable traction that Bitcoin ETFs have gained in recent months. Under his direction, Bitwise has already amassed over $250 million in assets, making it one of the best performing ETF debuts of the year. Hougan notes that this kind of achievement usually snowballs, with ETF growth frequently exceeding the first spike in the second and third years. He contends that the market for cryptocurrency exchange-traded funds, ETFs, is expected to grow even faster as institutional demand increases and regulatory clarity increases. For more updates on cryptocurrencies and the larger digital asset market, please like the video, subscribe to the channel, and enable post notifications. Let's hear his following words.
These are among the most successful ETF launches of all time. I mean, the Bitcoin ETFs are the most successful of all time. They've pulled in $18.5 billion in assets. That's 3 to 4 times over the previous record for the fastest growing new ETFs. So it's a grand slam. On the ETH side, you've seen a more nuanced story because you had a lot of money coming out of the Grayscale product. But if you look at the new ETPs, they're doing exceptionally well. I know BlackRock's is over $1 billion. Here at Bitwise, we're $250 million. Those are among the most successful ETF launches this year. So I think whichever way you look at it, these are a grand slam success. And the key thing I want people to know is that in ETF land, typically the first year is the weakest year. Usually the second year is bigger than the first, and the third is bigger than the second, and the fourth is bigger than the third. So this is a down payment, and it's a really big down payment. And I think actually they're going exceptionally well. You probably heard me say this. We're in the ETF era of crypto. So I think they're going to be ETFs on a wide variety of ETPs. XRP specifically, it has a very vibrant community. It's been around for many years and sustained that community. It has a novel consensus approach that's been working at low inflation rates, and it has interesting and evolving use cases. My general view on crypto, I'm an index investor at heart, right? I come from the sort of index investing side. My general view is we are still in the early stages of crypto, and no one knows exactly how it will play out. And so we want to offer investors access to a wide variety of assets. XRP is one with a strong community and a strong track record and a strong history. There are people with positive views. There are people with negative views. We understand that, but just if we can structure a low cost, secure way to access that, we think that's an improvement for the market. I think there's a major unlock coming in the stablecoin market. Stablecoins are a killer app of crypto. They've gone from $0 to $150 billion without regulatory clarity. If you listen to Congress, the thing they agree on most in crypto on the Democrat and Republican side of the aisle is stablecoin legislation. I think the US wants stablecoins. It's a way to export the dollar. It's a way to sell more treasury debt. It's a way to improve finance. Big finance wants to get into stablecoins. They're looking at Tether making more money than Goldman Sachs and saying, hold on, we want a piece of this pie. So if you have Wall Street, crypto, and Congress all aligned, I have a very high confidence that we're going to see breakthrough stablecoin legislation early in the new congressional season. And if we do that, I think it's Katie bar the door. I think it's Bank of New York. I think it's JP Morgan. I think it's Visa. I think it's every major. And so I think $1 trillion in 2 years is probably conservative.
Conservative,
right?
Yeah.
there's $10 trillion in money market funds. Stablecoins are going to be a better version of that. There's so much dollar deposit. And that's just in the US. You go globally and you can access dollars. I think $1 trillion is easy. So I would take the pro side of that poly market if it opened and if the regulators let me invest in poly market. I think as more regulated players want to interact with stablecoins as opposed to unregulated players, that biases towards Circle. I also think Circle is going to face more competition from traditional firms getting into the space, from PayPal marching into the space, from Revolut marching into the space. But I'm very bullish on USDC and its future. I also think that the level of sort of competitive moat in the stablecoin space is probably going to get a lot smaller as we get more regulation. Regulation substitutes for trust. And so you can see new entities gain scale really fast. And I think you could see a flippening in the stablecoin space. Look, I don't think Tether is going away. Incredible business, incredible footprint, particularly overseas. But do I think USDC will gain share? Yes. Do I think regulated stablecoins will become the dominant player? Yes. Is there a history in the crypto market of seeing that shift from unregulated venues to regulated venues? Absolutely. Look at where trading takes place. Right. So I think we're going to see that same migration in the stablecoin space. I'm very bullish on Circle and on its competitors on the more regulated side of stablecoins.
One major tendency that Matt Hougan points out is that diversified cryptocurrency portfolios are going to be more popular in the future. Institutional investors are attempting to have more comprehensive exposure to the whole cryptocurrency market, whilst regular investors are more likely to concentrate on specific assets such as Bitcoin or Ethereum. He says this strategy uses diversified funds instead of speculating on individual assets, which is similar to how institutions invest in stocks and bonds. Hougan believes that diversified portfolios will become the norm as more institutional money enters the cryptocurrency field, offering investors a more secure and well-rounded approach to participate in this quickly expanding asset class. And don't forget to like this video, subscribe, and turn on post notifications for more insightful breakdowns like this.
A lot of people, before we had spot ETFs, a bunch of firms filed to offer future-based ETFs, and we were one of them. But once you have spot ETFs, those are more efficient than futures-based ETFs. So what do? I obviously can't speak beyond what's in the filing, but what the filing shows is we're converting those strategies to rotate between, let's say, Bitcoin and treasuries. So if the market is in a positive momentum period where Bitcoin's price is rising and the 10-day moving average is above the 20, they'll be in Bitcoin. And otherwise, they'll be in treasuries if the market is falling. I would just say, momentum is the most established factor in all asset classes, in stocks, in bonds, in real estate, in commodities, and indeed in crypto. There's a big academic literature on that. And so we're just trying to offer a new strategy that captures that momentum aspect for people who are worried about those big pullbacks in crypto, which, quite honestly, is a lot of us. So I think this idea is to rotate out when the markets are in that position. The funny thing about crypto is it's one of the only markets where people are still primarily focused on single exposures. If you look at the equity market or you look at the bond market, no one's buying one stock. They're buying a basket of stocks. No one's buying one bond. They're buying an ETF of bonds. Our view is that the same is going to be true in the crypto market. As you move from primarily retail to primary institutional capital, they're going to want diversified exposure. That's the way institutions invest. That's what they're taught in school. That's what they're taught in their careers. And that's a dominant paradigm. So I think you're going to see more of these diversified exposures, more of people wanting to make a bet on crypto and not make a bet on, Bitcoin individually or Ethereum individually. Let's just make a bet that crypto and public blockchains are going to be more important in 10 years than they are today. That's a bet I have very high confidence in. And the way you would express that is a diversified portfolio. And I think it really is, sort of happening and exploding right now. So kudos to you on the idea. The thing about these ideas, which people forget, is, we all know that technologies go through this two-wave motion, right? Where there's a hype cycle and then a crash of despair and then the slope of enlightenment where they really start going. And that's what I'm seeing in the gaming space. We had the hype cycle, we have the pit of despair, But if you look past the surface and look at the numbers, you're seeing real and substantial growth. If you look at the pipeline of games coming into the space, it's very broad, which suggests we're going to have winners. If you think of the performant aspects of the underlying blockchains and the throughput and low cost that's now enabled in them, you can imagine the scale that you're going to get. So I think you're looking at it at the right point. You're like 6 to 12 months ahead of where the market and the media coverage is, because you're starting to see traction, but people are stuck on the old narrative that Web3 gaming was a bust. And that's just not what the data increasingly suggests.
According to Matt Hougan, one distinctive feature of the cryptocurrency market is that investors continue to place a lot of emphasis on individual assets. In contrast, institutional investors purchase diversified portfolios, such as exchange-traded funds, ETFs, rather than a single stock or bond in traditional markets. He thinks that as more institutional money enters the cryptocurrency industry, the same change is occurring. Instead of placing all of their money on one asset like Bitcoin or Ethereum, these investors are trained to place a higher priority on diversified exposure. Hougan believes that in the next 10 years, public blockchains and cryptocurrency will become considerably more important, and that the best way to invest in that idea is through diverse portfolios. He also discusses the dynamics of the larger market, pointing out that technology frequently experiences cycles of excitement, busts, and ultimate rise. He believes we're now approaching the phase of enlightenment in industries like Web3 gaming, where early passion has subsided. Additionally, as Matt Hougan pointed out, diversification will be crucial in determining the direction that the cryptocurrency industry takes as it continues to change. Diversified portfolios offer a safer, more well-rounded approach to investing, much like in traditional markets. The cryptocurrency market is rapidly developing as institutional money pours in, and industries like gaming are exhibiting genuine growth below the surface. It is now more appropriate to consider having a broad exposure to the entire market than it is to concentrate on certain assets. If you enjoyed this video, don't forget to like, subscribe, and hit the notification bell for more updates on the world of crypto and blockchain technology. Let us know your thoughts in the comments below.